Hello and welcome to this video. This video is an extension from one of my previous videos where I had discussed a trade on NAK, which involved selling naked puts. At that time, the trade was still open. Now the trade has been closed, and this video is a summary of how the trade went and what kind of returns I got on it. Before we proceed, a quick look at the disclaimer. Moving ahead, so this was basically the initial trade, which involved selling the 50-cent put on NAK, and I had sold six contracts in all and collected a premium of $16 for each contract, thereby bringing in a total premium of $96. And so, in this particular case, what this meant was that if NAK's price was to go below 50 cents, then I would have to buy 100 shares of NAK at 50 cents each. So, this was the initial trade that I had initiated on 3rd February. And so the total premium that I collected was $96 for a total of six contracts here. And this is basically the closing part of the trade. So on March 16th, so you can see here that the trade was initiated on Feb 3rd. And on 16th March, which is basically about 42 days later, I closed the trade where I bought back the six contracts that I had sold for $1 each. That means a total premium of $6. So here I had collected a premium of $96, and here I had to pay $6 to close this particular trade. So if we consider these two values, then we can see that the total net premium that I received was $90. And this is basically the price chart of NAK between the dates 3rd February to 16th March. These are the dates during which the trade was active. And you can see here that the NAK price was trading between 60 cents and it went as high as $1.15 approximately during this period. So in my case, I had sold the 50-cent puts, which are below this lowest price that NAK touched during this time frame. So in this particular case, my puts were never threatened, and there was no chance of the contracts being exercised at all because the puts were never in the money. So this particular trade worked out exactly as I had expected. The price continued to stay above 50 cents. The contracts were never exercised, and taking advantage of the time decay, I was able to collect $90 of premium, and this happened over a period of 42 days. And the chart here basically is showing the price action between those 42 days, and this confirms that the price never threatened the NAK contracts that I had sold. Now, this is the summary of the net profit and loss that was made on this trade. So as we've seen earlier, this particular trade was a naked put being sold, and I was selling 60 contracts with a strike price of 50 cents. And so the total cash that is required to be put up was $50, because if the contracts were exercised, then I need to be able to buy 100 shares of NAK at 50 cents, which requires me to put up $50. And since I sold 66 contracts, the total cash outlay was $300. The premium, as we saw, that I had collected while opening the trade, that means selling the six contracts, was $96. And the premium that I had to uh, spend in order to buy back the contracts, that means close the trade, was $6. So the net premium that I collected was $90 here. So now if we calculate the return, my total premium or profit here is $90, the cash outlay being $300. So this is basically a 30% return. But this 30% return happened during the duration of the trade, which spanned over 42 days. So if you annualize this return, uh, we basically get a figure of 260%. And this is way, way higher than any kind of returns that you can get by trading any of the index related strategies. So this particular strategy was really, really profitable. And the reason here is because when I initiated the trade, the NAK price was about 60 to 63 cents, And I was not buying shares of NAK even at 60 to 63 cents. Rather, I was selling the 50-cent put option. So I would end up buying NAK only at 50 cents. So the NAK price had to fall all the way from 63 cents to 50 cents. That means by about 26, about around 23, 24% in order for the options to be exercised. And again, the net cost of me owning those shares would not have been 50 cents because I was collecting 16 cents of premium. So the net price for me would have been 34 cents. So you can see here why this trade is so profitable, because for me, I would have bought NAK shares effectively at 34 cents when NAK at the time of initiating the trade was actually trading at 63 cents. So NAK actually needs to fall by about 40-45% in order for me to make start making a loss, and that is the kind of trade which actually keeps you on the right side of things so that your trades can be profitable. So the first question that I had here was that I'm trying to buy shares at 50 cents, not at the current market price. The second question being that even if I end up buying shares at 50 cents, I'm collecting a premium which reduces my cost basis down to 34 cents. So I will link the first part of the video where I had initiated the trade uh, in the description, and also I will link the other video where I'm explaining how to execute and identify uh, trades like these. Basically, I call it identifying stocks which are on sale or trading at a discount, so that you can basically make profitable trades. As usual, if you have any queries, comments, or suggestions, they're most welcome. You can leave them down in the comment section. And please like this video, share it with your friends and family, and subscribe to my channel. And if you have any other queries, please mention them in the comments. Thank you, and I'll see you in the next video.